was interesting. I hope I opened some minds. Maybe some questions. And if you got some questions, please feel free to put them in the chat. Eric will read them out.
Dan, I just want to circle back to some of the practical uses, which I find interesting about the product, and maybe me and you could just discuss it a little further. So one of the things that I like is I find that when a parent is gifting their children a down payment, most people don't have 100, 200,000 liquid in their account, so they cash their investments. There's obviously tax implications when they do that. So using a reverse mortgage for the parent gifting to the child, there's no tax implication and there's no payments for them. So eventually when they sell the house, yes, there'll be some interest accrued, but there's no monthly obligations and there's no tax implications. So using the reverse mortgage, it's a clever way to avoid taxes when gifting to a child, right? So
and Eric, we're seeing just to touch on that, Toronto, BC, we see that's at like 40% of our business. Okay. Because accessing the real estate market very difficult. And now in the greater Montreal area, we're starting to run into that problem. And that's really increasing for us as a portion of our business.
Yeah. And I also find it's better a parent to gift rather than co-sign for a child who doesn't qualify. So that's another useful application, using reverse mortgage to avoid co-signing for a child and just gifting the down
The problem with co-signing, Eric, is what's the bank looking at? They're looking at their revenue to co-sign.
Yeah.
Often in retirement, if I'm living off my pension, let's say I'm pulling 4% from my RIFs every year. So adding that smaller revenue is still not even enough in this qualification climate to really help, so that signature is not worth what it was 4 or 5 years ago.
Yeah. Another aspect that I like would be using a reverse mortgage to purchase a revenue property. So you would take a reverse mortgage on your principal residence and then use that cash for either a down payment or to buy a revenue property cash to supplement
a lot of people are looking to get back their cash flow, so collecting some rents and so on. And while I am not a fiscal expert, if you're using that money as an investment, you can write off, I believe, 50% of the interest of that investment. So either you could, if I'm 63, maybe I pull it out, the money, and give it to a financial planner, or I buy the revenue property, generate some income. I can write off some of the interest. Please contact an accountant to get further information on that.